Good morning, everybody. Welcome back to the Everyday Growth Advisors live stream. I hope you guys are having a good morning, good evening, wherever you are, wherever you see. I am here to brief you on the deed. Hey, it's been a good morning so far. We are seeing a little bit of a correction. The skies are pretty green, and we are seeing all systems are a go so far. I am cautiously bullish here, at this moment. I do see a lot of momentum though, which is really interesting. I see a rippity dippity on NASDAQ and SPY right now. NASDAQ actually leading the way here. But let's see. I'm going to get through the technicals in a second here. Okay. The legacy of last year will be devastating inequality. Wow. What a headline for the news. Way to promote optimism, guys, at Bloomberg. I wonder what the editor of this publication is thinking, posting something like that. Jeez. I mean, can we just have a nice headline for once, you know? Like a nice little headline? I don't know. Anyway, just thought I'd let you guys know. I don't think this affects you. I had to double confirm if it affects you, but can you guys also let me know? I don't know if this is correct, but I believe on the 14th we have daylight savings that would be turning back, right? Which means that you guys that lost 1 hour will gain 1 hour back while you're sleeping, correct? The clock gets turned back, gets turned forward. Does this mean that the market opens up? Yeah, it probably opens up at the same time for people living in America, correct? I don't think it affects the stock market timing for you guys. But for us in Asia, it's going to open up 1 hour earlier, correct? Now it's 9:30. That means this stream's going to start at 8:30 for me. Right? Am I right? Somebody confirm this for me. I'm pretty sure because we have a Singapore and the EST time difference is actually supposed to be 12 hours. Now it's 13 hours. So it's going to go back to 12 hours, correct? So which means to say that there'll be minus 1 hour for our side, which means that my live stream is going to start at 8:30 and your timing of the market opens up at the same time. Yes? Correct? I'm pretty sure that's correct. So starting from next Monday, the live stream will be at 1 hour earlier for me. Those who are in Singapore watching the stream, just note that, okay? Also, in an effort to keep these live streams succinct, I'm going to start limiting them towards 30 minutes or less. So we're going to do everything within 30 minutes. I don't think we need a lot of time. I usually spend the extra time just chilling with you guys anyway, but I want to keep it as succinct as possible so I can spend more time with the Discord community every morning going through certain things. There are a lot of changes on the way, especially with the EJ community. We are improving, we're upgrading, we're doing things better, and I want to make sure that I give all my time to the Discord community because that's where I've put my focus on. And, we're a great tribe that's growing, and, I want to make sure that I really I focus all my efforts here. Almost 90 members strong now, and I want to make sure that I focus a lot of my effort bringing as much value as possible to the Discord community because that's where, I see our real stronghold and our real ability to help people, especially through the live trading sessions and whatnot. We have just an immense amount of value that we're giving on the Discord, and so I want to continue to improve the value, stay way ahead of our competitors, stay way ahead of everybody who thinks that they're competing with us. And yeah, I think it's going to happen this year. It's definitely going to happen this year. Okay, great. So futures drift with stocks, growth rally, blah, blah, blah. Okay, we kind of broke out of this pattern here. Let me delete this away. We don't need this anymore. And then what else? China weighs tighter rules for IPO something. SoftBank back Grab weighs US IPO through SPAC merger. Interesting. This one, this should be a big one. Grab operates very, very bigly in Asia. FYI, guys. Grab is a huge. It's like Uber. Actually, not even just like Uber. It's really combination. They do everything. They do deliveries. They do everything. Grab does a whole bunch of stuff. It's like a delivery company. You can think of like a tech delivery company, I guess, offering different services. And then, okay, India's combined fiscal gap reached da. Okay. All right. Interesting. All right. Not much on Bloomberg there. Let's look at the Wall Street Journal here. Just read through the news real quick. Stock futures choppy ahead of inflation data. We have inflation data today, yes? CPI numbers coming out. Yeah, CPI. Okay, CPI was better than expected. So not much inflation here. Month over month, year over year, we're still the same. Core CPI a little worse than expected. So actually, inflation is not even a problem right now. So core CPI, this is the one you want to look at, the year over year one. This is the important one. The core consumer price. Remember that this is excluding of food and energy. Okay, changes in price of goods and services excluding food and energy, because food and energy are subject to different types of inflation. So we exclude them from core CPI. Okay, and it measures the change of the prospective consumer price, and a key way to measure purchasing trends and inflation. So we do not have much inflation on the rise. That's probably why the market's rallying a little bit. Those inflation fears are suddenly going away. That means the 10-year rate's about to go to the floor, right? Or it should start to go to the floor. Okay. The 10-year bond. This was rising on inflation. So we should see the bond appetite come back a little bit in the near future. But I think, honestly, I think the bond rates are going to stabilize somewhere here, because it's actually come back to where we were last year. Okay, it's come back to where we were last year. So I think I expect to stabilize here for a while. Actually, we should be at the 2.0 number. That should be the nominal yield, I believe. This was way too cheap, right? This was way too cheap. Okay, this was when everybody was running towards the hills because of COVID crisis. Now the bond yields are coming back to earth. So we continue to track those. Okay, great. What else is there? Morning, guys. How are you doing? Make sure you guys smash the like button. Hope you guys enjoying the stream, enjoyed everything that we do here. I'll continue to put out great value for you guys, and let's get it together. We call the beautiful rally. We call the beautiful. First of all, if you've been following the stream for a long time, and you've been following along what we've been doing, we literally have, at this moment, we have called out a perfect top. We have chased that rally to the bottom. We cashed out our hedges, called the bottom, and now we are riding a wave to the top. If you're just tuning in, this is what we've been doing for the past 2 to 3 months, and it's been a perfect play from start to end. And when something happens perfectly like that, that's when I get uncomfortable, because you cannot get complacent, okay? And you cannot get overconfident. Remember, overconfidence is what will kill you, okay? So right now, I want to be very cautiously bullish, okay? Because when good news breaks like that, I want to be cautiously bullish. I really want to see SPY above 3,900. That's really a key point for me, okay? We need to close above 3,900 for a nice pivot continuation to the upside. This is what I'm looking at, okay? 3,900 should be a key level for us to break. Consolidation above 3,900 is actually even better. This wave, though, has been a pretty healthy wave. We've had pull up, pull back, pull up, pull back, pull up, pull back. We need a break above and a consolidation above this level here at 3,900, and then we can start a nice rally to the upside further. But I don't know if we will get that right so often, to be honest. I think we might have that sideways consolidation for a while. That might be the case, okay? It might be the case. But nevertheless, this little megaphone pattern still holds a little bit. We can see a sell-off back into this pattern if things get choppy. So we'll wait for the confirmation above 3,900. That's the key level right there. We tried to test it twice and we failed, as you can see right here. Right, we tested twice right here and we failed. That's the level that we need to break in order to really start catching these upside levels, and then SPY breaking up into all-time high. Okay, will that happen anytime soon? I do not know. Okay, I do not know. We were hoping that we would come down to 3650s, but we never got there. Our first target was hit though with SPY. These were our first two support levels that we hit right on the nail. Then I lowered the target, hoping that we may get there eventually for me to pick up more shares, but then we never got it. We instead got the bullish engulfing candle, and then we got the strong rally to the upside. So while people were bearish and saying, "Oh no, we don't know what's going to happen. I don't trust this market. I don't do this. I'm not sure." And the funny thing is, they're apparently the proponents of big TA, and they know these things extremely well. They've been trading markets for a year. Don't get me wrong. It's been really good ride for them, and I'm very, very, very proud of them for doing what they're doing. But the fact that they can't call out and can't understand price action to call out a bottom, I don't know, man. Makes you double think. What are these people actually doing with their lives? Okay. Flood of new debt tests weakening bond market. State expected COVID to bring widespread TA tax shortfalls. It didn't happen. Volatility hits a sizzling SPAC market. Yep, that's another thing going on. SoftBank, meanwhile, is at, I don't know, something crazy again, right? I believe it's, sorry, not SoftBank. GameStop is at $277 pre-market. Let's see if this time it'll go to $1,000 and be really irrational. This will be interesting to see again. The insane buy up again. Well, I don't know if it'll happen, but I'm just joking around. SoftBank put 400 million into green still months before collapse. GameStop saga prompts SEC to weigh review of stock order system. Okay. I don't know if they can or should do that, but they shouldn't mess with the system. Okay, so that's that. Pre-market here looking pretty flat, except for Tesla up 2%, which is nice. Everything else kind of trading flat. Okay, everything else trading. We'll see if the rally opens up for a really green day or if we get a correction. My guess is a possible correction. That's my guess. The way I look at it, it looks like we do want to correct downward before we continue to the upside. So I would say a nice little pullback to the, 50. The 50 EMA here would be nice on the Nasdaq. Back to the 12,600 levels, right? The 12,600 levels or 12,700 levels. This is a good level to pull back to. Maybe trap some bears and then rally to the upside. That's what I would possibly see on Nasdaq here. On SPY, a similar situation. Perhaps a pullback to, the 3,850 level or so, the 61.8 here, and then a rally back up after trapping out a couple of bears for the next wave. The alternative thing is something else happens and then we got a strong sell-off, some other news breaks or whatever. Okay, so that's if all else holds constant, then we're on track to go more further to the upside. I think the rotationals, we'll see the money that has jumped into Dow the past 2 weeks flow out, and people will start dumping value. This was all value money coming into value stocks, right? This was all value stocks driven. And then we'll see this money pump into Nasdaq. Okay, we'll see Nasdaq rally again. So that's the rotation you have to keep in mind here. Okay, markets are gonna forever chase returns, and so we'll see the sell off in the Dow and then the rise of the Nasdaq again, and that will bring the S&P 500 as an average back up again. Okay, that's what I'm looking at for the next 2 trading sessions at least, or even spanning into next week. Okay, that's what we're looking at. And if you watch the webinar, that's exactly what I've been talking about. Rotation out of value into tech, but as I mentioned, we were trading value and tech. In fact, I bought a lot of value stocks on this dip. Okay, the portfolio was up about almost $2.5 grand yesterday, and all of these were all value stocks. Okay, so yeah, it's been a great one. I still have some positions that have not cleared. The CCIV puts got assigned. This buying power needs to clear out. I still haven't received the premium on this. 19th of March is when that premium comes in. So I still have to wait about a week and a half for this trade of the negative 14,000 to clear. And then my buying power that I put in still needs to clear. That's going to happen sometime next week. So this account, I don't think I'm going to be able to trade on this account for the next few days because buying power is still settling down. I made a bunch of wire transfers and they're all kind of just selling down. What I do have open right now are Coca-Cola Leaps, Palantir long-term option, SOS SOL put, and SPY calls for April. Okay, those are the only things I have open right now. Apart from that, are all equity based. I'm not too bothered about chasing specific stocks at this point. I don't need to. Okay. All right, cool. Good morning. What's up, Fabio, Mark, Susie, Sivas, Aaron, Ryan, Mario, Cameron, Santosh. What up? Cool. So should we look at Palantir 25s, 30s if Nasdaq bounces the way we want? Yep, sure, if that's what you want. Amazon 3,200 for 416. That's probably a good bet, Santosh, to be honest. I like Amazon at this price. For April should be okay, in my opinion. I think that we've got a strong rally towards the end of March into April. And then end of April, we get another mini correction. And then in May, we're going to start trading flat again. So That's what I'm looking at for the next couple of weeks. Obviously we can't say what's going to happen, but I'm just saying this is typically what happens in terms of market sector rotations and market movement. Okay. All right, great. So we looked at SPY, SPX. I did the ticker break. I did the technical breakdown here. We're peaking out of this ascending kind of a pennant, right? If you get rid of this trend line, you can see it's actually a ascending pennant, right? And we're peaking out of it already. That could be a reason for us to break to the upside. But as I said, we need a break above 3,900 to secure that upside. Bulls need to capture 3,900 in order to pivot to the upside, okay? And so we really need that strong rally up if we want to continue the pressure up on bears, all right? As more people get bearish, which is what has been happening this last week, a lot of people have been buying puts. I think this is all the more reason why the market has rallied, okay? I drew this arrow on the last live stream, didn't I? That's interesting. What's the difference in SPY being 3,800 and SPY SPX? Well, I believe that, so this is 3,888 and SPY is at 3,000. It's about the same. Honestly, it's about the same. It's not very different. They're not very different. I think there's a minute difference. So 3,835. This is 3,887. So you can see there's like a minor difference, right? But I guess, you know, the first two numbers are always going to be the same. So until unless you really care about the cents, I think SPY and SPX will be pretty synonymous in terms of the price that it's at. Remember that when you buy SPY, you're buying a bite-sized piece of the S&P 500. That's what this is. This is an ETF, okay? So it tracks this index. That's what you're actually looking at. Okay, great. We got this done. Pre-market movers really quickly. Let's have a look. Not really much here. Boeing is up 1.44% on better than expected order numbers. Tesla up almost at $700 again. I have exposure on Tesla through ARK Fund, which I bought on the dip. I bought 30 shares of the ARK Fund at $116, which is now at $124. So that position's up about $242. Really nice there. We'll see if we can continue the pressure to the upside there with the ARK Fund today. But if tech rallies, this portfolio is going to outperform everything that I have. So I really want tech in some ways to rally. Of course, you know, we'll see whether it does. I'm not chuffed about it. Last year, this same portfolio, similar portfolio, gave me a 35% return, and that was more than what the S&P 500 returned the same year. So I'm not really that bothered with the return on portfolio. I'm pretty confident about it. Especially since I also have diversified investments within this. I have the ARK Fund, I have K-Web, which is a Chinese ETF, a whole bunch of things. When I think about IPOs, Roblox listed today, I personally don't, if I don't keep track and I don't know enough about it, I don't trade it. I like to trade the things that I like. I like to trade the things that I know. I don't like to take things that I do not know. Things can go up 100% one day, the next day it's down 50%. I'm not interested in those things. I like slow and steady growth. That's my style. Of course, not everybody is like me. Some people like to convert 20,000 into $50 million overnight. I don't like to do that. I like still slow and steady growth. I like to go the approach where long-term wealth is created. Do it through a responsible manner. Manage your risk. Manage your numbers so that you can get everything done at the right time. Okay, that's my style. So if you want to trade the IPO, please go ahead. Okay, now let's have a look at FSLY. I'm going to end this stream in about 10 minutes, just FYI, guys. So I want to get this done as soon as I can. So FSLY revenues, just want to kind of double back here with FSLY. And we've been covering this as a ticker of the week this week. Okay, and I'm going to give you my my valuation of this business based on what I have been researching and what I've been calculating. Okay, so the stock is starting to bottom out now. I think it's a really great time to pick up positions in the stock for a swing trade. We need a confirmation, as I have mentioned before, above the $78 level. Okay, this is the level at which we want to enter FSLY. Above this $79 is where the entry should be. If we can get a breakout of this level, consolidation waves, 2-3 consecutive waves higher, and then a consolidation above this level here. Okay, this is our entry right here. We want to enter somewhere here. Okay, on the next 2 waves up or so. Okay, and then we can ride this thing to the upside for a longer term contract, maybe up 50 to 80 days out. All right, that's the strategy with FSLY. We have two gaps to be filled. You can see here. One is at 87 and 93. The other is at 104 to 107. These are two gaps that need to be filled into the future. Okay, and it will get there eventually. It will fill this gap. It will fill that gap in the future. Okay, it's gapped down twice. It will come back eventually. When tech rallies, this thing will move for sure. Okay, now is it a good company to invest in? Okay, based on what I've been reading. All right, first of all, what is the competitive advantage of FSLY? It has programming edge. It has safety, in depth. It just merged with the a cybersecurity company, and then they have they concentrate on customer empowerment, software-defined modern network, blah blah blah. Okay, this is why they are better than other businesses. They have a enterprise-grade feature with programmability, reliable technical customer support, good neighborhood, blah blah blah, better performance. Okay, great. Now, what about in terms of enterprise customers? Well, enterprise customers are actually the ones driving the growth, which is great. This is good. We want them to have business B2B, sales. That's a good thing. Okay. Also, guys, there's 50 of you on this stream. You think you guys could take a second hour of your day and help me smash the like button? I would truly appreciate that. We put in a lot of effort and time into these live streams, and I'd really appreciate it if you could just take a second hour of your day and just hit the like button or subscribe to the channel if you haven't. It really helps us out, and it really kind of helps this stream reach other people. But if you're just here and you don't want to press the like button, that's fine too. Drop a comment, do something. Like if you can just help us out, that would be really cool. I truly appreciate it. Okay, cool. And expanding customer usage. So they have this new way of doing things. So this is not really that significant. Loyalty and retention metrics. So this was actually particularly caught my eye with the annual revenue retention rate. They actually retain 99% of their revenue, which is nice. And dollar-based retention rate is actually higher than you even. So it's actually pretty good. So how do they grow? They focus on solutions and modules for vertical integration, and then they leverage with partnerships with Google, Heroku, blah blah blah, all these people. And then they also have international vertical expansion, which is growing outside of the US. Okay. So here's their financial overview. They have great top line growth, expanding gross margin, significant operating leverage, disciplined path to profitability. Okay, blah blah blah. Here's the they want to capture this specific app market, and making like pretty much optimizing space for winning cloud markets in that specific space. Strong revenue growth this is true. They have a pretty good CAGR, 45% right currently, from 2017 all the way to 2020. This is a relatively new company, by the way. Growth has been about 40%. CAGR has been about 45% over the past few years. But I want to say inherently, I think they are growing revenues at a pace of about close to 50 to 100%. Okay, and personally, I think this is a business that's gonna. It's obviously a growth company, right? It's not going to be a company that's going to be focusing on value, or it's not a value-based business. It's a growth-based business. So cloud-based businesses are usually focused on growth itself, right? And so they have optimization, blah, 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 using efficiency and scale to scale the business, okay? You can go read all this stuff on your own. Honestly, the main takeaway for me was, okay, they're still cash flow negative, okay? And the free cash flow margin is still negative, but I think in terms of free cash flow, yeah, they're barely breaking even, okay, which is not bad, okay, don't get me wrong. Listen, for a tech company, they need to spend money. That's a good thing. I would rather them be a little bit free cash flow negative now than be free cash flow positive and then not expand the business, right? You want them to capture market share, they have to spend money to do so, okay? But the revenues are growing at a nice pace, okay? So they had $290 million in revenue. Company's growing pretty fast, but does it really justify the valuation though? That's the question, right? So we have to do a valuation, and so in order to do the valuation, I had to go find out what kind of growth rates to use. So I decided to do a 10-year EBITDA model for DCF. So using operational cash flows, okay, and let's talk about, let's say the operational cash flows growing over the next few years. Okay, and we talk about operational cash flows growing here. I think, you know, in the last year they grew about 45%. I'm taking conservatively here that we can grow at a 70% this coming year, 50% the coming year after that, and then 50%, 40%, 40%, 30, 25, 25, 25, and then 20 flat for the next year until we hit a 12.5 and a 7.5 in the year 2029 and 2030. Okay, so a 10-year valuation here with that a conservative growth rate. Okay, realistically, this is a conservative valuation. I'm taking a low end growth, low end. Okay, a low end. I'm saying that value that their operational cash flows will peak next year, so I want to be conservative. Okay, capex here at 10% makes it pretty legible, right? Working capital at 27.9%. That's across the past quarters. We're taking the same. Depreciation and amortization at 7.5%. That's fine. Tax rate 11%. They're still making a, I believe, a net loss. Yes, they're still making a net loss, so they don't pay any tax, right? They don't pay any tax. So we don't need to look at taxes for the foreseeable 5 years. So the tax for selected tax rate assumption is 11%. And then the discount rate, I'm taking a little higher than usual. I think the existing discount rate was 9.5 to 10.5. I'm making it, I put 9.5, 10.5. I think they were taking a 10% flat high, and I made it 10.5 instead, so that we can take a higher discount rate. That gives us a terminal EBITDA exit at 16.4 to 18.4x, okay? Which means that cash flows will grow around that pace. This results in a $114 fair value for this business right now, okay? And since the stock price is trading at 69, this means that this company is undervalued currently. Now, is this a company that I would invest in though long term? Probably not. But is this a company that we can trade? Absolutely, okay? This is a tradable company, but not an investable company, all right? Because this company does not have a competitive moat that is intact, okay? And it's just not a business that I would want to own long term and put in terms of my big portfolio. Like I wouldn't put Fastly here. You know what I mean? And so Fastly is a good trading stock. It's a good one to trade because it's volatile, but it's not a good stock to own in your portfolio. It's too volatile. The beta of the stock is very high. Okay, and so I would trade Fastly above $79, which is the first thing. And the second thing is, I hope you enjoyed my valuation. So I've put here $114, and I'm going to write a little note here, as I always do. Intrinsic value done on 3/10/21 on live stream at 114.01. And we'll make this smaller, and we'll make this yellow as usual. And we'll leave this here, right, as a reminder that this is the intrinsic valuation, right? So coming out with these assumptions sometimes can be the toughest thing about valuations, right? These are the toughest things. The assumptions to make are the toughest ones. It takes years and years and years, to come and try and find the right assumptions here, because I obviously had a lot of experience doing this over the past few years as a financial analyst myself. For those of you that don't know, I was a financial analyst before I have been doing what I'm doing right now. I've been a financial analyst for almost three and a half years, and so for me, it's been a matter of looking at a lot of balance sheets, a lot of income statements, a lot of different things that I value on a daily basis. And so taking out these assumptions, I always take the conservative assumptions. Therefore, I know that if I understate my revenue growth, the stock price can go higher than that. It's a good outcome for me if I'm bullish. And if I'm bearish, then I overstate the outcome for revenue, and that way I get a more bullish than bearish outcome, which is still positive net for me. So that's typically the way that I approach it. Okay. All right, great. So now, in terms of financials here, we'll go through a couple of last things right before I end the live stream here. So net margins are down for this company. ROIC is down. Return on equity is down. You hold the stock, you lose money. Basically, that's what it's saying. ROA is down. Debt to equity ratio. They don't have much debt in terms of equity, but they do have debt, which they have to pay back through other means, which is money that they borrowed through other means. Okay. Current and quick ratios are okay. They have cash on hand to support assets. But apart from that, these guys have a long way to grow. All right, long way to grow. We'll continue to monitor, and if any news comes out, make sure you watch this one. But apart from that, I'm gonna leave you guys here with this one. Thank you for tuning into live stream. These live streams are gonna be shorter now, in case anybody missed it. We're gonna be covering more things in a much zero-in fashion, so that these live streams remain applicable and very straightforward for people to digest. Okay, great. I'm gonna end the stream here. Remember, next week, I don't think the timing changes for you guys. It changes for me though. So the clock is gonna wind back 1 hour for me. I'm gonna jump on the Discord right now to brief the team on pre-market stuff that I need to discuss with them. We go through the snipe list every morning, and what is our game plan for the day. Kind of like just kind of get through everything so that we can be prepared for the whole day. And so I'll see you guys on Friday. And yeah, new ticker on Friday. We'll pick that. Keep it going. Keep this thing going. Once again, for people who missed it, the right way to play this was SPY above 3,900 is a pivot to the upside. Rejection at 3,900 is a continuation to the downside. Maybe a possible retrace back down to these key levels of 3860, 3840. Those are the two key levels that we're looking at. Maybe even, 3880. And then after that, 3840. Okay, those are the two levels for today. So we want to see the SPY break out of here today, if anything, and that will hopefully mean that tech will rally along with it. Okay, that's what we are hoping for. If not, we see the rejection, we come back down. Up here, wouldn't be a bad idea to pick up a short little hedge. Not a bad thing at all. Okay, if you want my honest opinion, I would say pick up one hedge. It doesn't hurt. It's like a cost of doing business. Okay, but I do see NASDAQ pretty strong, and so we'll see how this plays out throughout the day, and I'll keep you guys updated on Friday. Have a great trading day, guys. If you want to join the Discord community, you know where to find the link. It's going to be www.learncompoundgrow.com. All you have to do is go to our website and sign up. Click on this Discord access right here, and you will join our community of our Discord community, where you can trade with me daily, live trading sessions every single day. All right? Cool. I'll see you guys on Friday. Take care, and I love you all. Peace, and bye-bye.